Happy New Year, everyone. Life Insurance 2025. Quick update as we head into the year. I'll take you through the evolving landscape of life insurance, the opportunities ahead, and how together we can navigate this dynamic environment for success. I want to start with a quick quote that sets the tone for today's discussion. This is by Jerome Hagley, the Group Chief Economist of Swiss Re. It's from mid-2024. The insurance industry has reached a new equilibrium. The global economy has surprised on the upside, which should drive more demand for insurance. Now, whilst we understand the global view and Australia is somewhat of a unique market in that respect in terms of the difference, we do believe that the Australian market is poised for growth, and there's some innovation coming through from the insurers and from the reinsurers and even from practices themselves, delivering increased value to advisors and policyholders. A quick overview today, just the global context. The Retail Life Barometer, which most of you do have access to in terms of managing opportunities, where are the opportunities in the space. The sales approach that's being adopted out there by BDMs, or what we think should be adopted by BDMs. The general advice sector, and what does the NCA, new class of advisor, mean for the life insurance market, or the retail life market. Group life, an area that we're going to be focusing on this year as well, and the 2025 life landscape. We've already got more than 900 advisors participating in the detailed study that has just kicked off just before Christmas. So Per Score's recently released report, just before Christmas, while Australia experienced declining retail life insurance volumes, as we know in 2023, having declined pretty precipitously since the life insurance framework, 2024 hopefully marks a bit of a turning point. Encouragingly, we're moving back into green territory, albeit from a modest starting point in that sort of 5 to 10% range. Now, we as a business remain determined to help the industry achieve a realistic target of $500 million in new business in retail. We were at $800, $900 million not so long back, 7-8 years ago. But given the opportunities ahead, I think it's a realistic target. We're already seeing higher volumes come through our Find an Advisor websites, be it ourselves, Australian Super, Colonial First State, who we're the back ends of. But what we're not seeing is the conversion rates, and partly due to the fact that a lot of these leads are actually going through to sort of the lower risk riders, or those that don't have the sort of experience to write risk. So we do see that as a huge opportunity for this space. The Score report also highlights, and as we know, the growing impact of mental health, and particularly sleep, on claims and mortality rates. Now, we know these factors can be closely tied to heart disease and stroke as well. And there's an emphasis by reinsurers and insurers now on things like health and well-being. We're also seeing it around artificial intelligence and data sharing in terms of understanding what these conditions actually mean for clients, for policyholders. I think by addressing these emerging trends, we position ourselves as a market to better serve clients whilst navigating sort of the changing risk landscape effectively. And, you know, a lot of insurers, a lot of practices are bringing in more sort of health, well-being and mental health initiatives. Let's now dive into one of the most exciting tools at your disposal. It's the new Life Insurance Barometer version 1.0, accessible right now to insurers on the right. Now, this platform not only tracks the market's performance, but also helps us uncover actionable insights right down to the advisor level to drive growth. So here's what it reveals. As we know, we had an increase in the last 12 months in terms of new business retail volume. Now, this actually excludes MLC Life for now. So whilst this figure originates from a low base, it hopefully demonstrates the market's growing momentum and resilience. So the role of individual advisors. 73% of this new business can be traced back to individual advisors, with the remaining 27% originating from entities, so it's sort of more practices or general advisors. It's an opaque part of the market that is growing. Next quarter's barometer will provide even deeper insights into these categories, and we'll have them split out as part of that barometer. So let's take a close look at the top practices. It allows us to zero in on these top performing practices. We can drill down to 10, 20, 30, 50 practices and the advisors, and it rolls up right up to the licensee level, obviously. Importantly though, through the segmentation tool within the barometer, we can drill down to every individual advisor, irrespective if they're in the top category or right down in the bottom category, to unlock and see where potential value is in the market as advisors start to move, get more comfortable with risk, or move from a holistic practice to a practice that's more risk centric. This segmentation capability is pivotal for tailoring strategies and uncovering growth opportunities at every level, and can be tailored. Obviously, each one of these barometers is tailored towards your own strategies internally. The opportunity finder here is a bit of a game changer, we believe. Thank you to those insurers who have provided feedback. It is tailored to each insurer's growth segments. It allows you to harness your segments and focus your efforts more effectively. As an example, looking at those Category A advisors writing new business in the last 6 months. So if we search for practices in Brisbane, the tool identifies 18 practices. From there, we can pinpoint specific opportunities, like those at Walsh's Financial Planning here, to build stronger relationships and tailor offerings to their unique needs. So if we take a spotlight on Walsh's Financial Planning, it illustrates at a granular level certain details like client demographics. They serve a young client base, primarily pre-retirees, and we know they have a niche in medical professionals. It takes you through the business metrics. Over the past 12 months, Walsh's has added $2.5 million in in-force premiums, evenly split between new business and rebroked policies. Now, given their client type, they have a high proportion of IP policies compared to other firms, which is more life-centric. So among their team of 10 here, 8 have in-force premiums. If we drill into one of those advisors, let's take Tyson. He stands out as a younger, dynamic performer. He writes significant new business across 7 insurers and is classified as a top-tier advisor in the A category. In this corner here, we also include his advisor quality score. This metric's now being used by some super funds, larger super funds, and general insurers to assess PI premiums. This is becoming more used within the wealth ecosystem in general as part of partnership arrangements and compliance assessments. So the barometer also flags opportunities for insurers to strengthen their engagement with Tyson, given his broad client base and high activity levels. So I guess all in all, the barometer is more than just a data repository. It's a strategic enabler. For BDMs and insurers, it provides detailed insights into advisors and practices, enabling a clear understanding of client bases, policy trends and growth opportunities, the ability to benchmark performance and support advisors with tailored strategies to enhance their business outcomes. By leveraging insights from the example just shown, Walsh's Financial Planning, advisors like Tyson, it allows BDMs and insurers to unlock new opportunities. It fosters deeper relationships with those advisors and helps drive more sustainable growth. So we believe that barometer is actually a huge key to unlocking value, given the precise nature of it and the purpose in which it's been built. Which takes me to the following point. Now, if you're a BDM or an underwriter, understanding advisor practices beyond just life insurance is really crucial, especially if they're a holistic practice or they've got a holistic element to it. Understanding if they're writing SMAs, understanding what technologies they're actually inputting into their business or they're rolling out, those sorts of relationships or understanding that can be crucial if you're a BDM. Here's where we detail the comparative ranking on this slide and the performance state by state in the 2024 landscape report. Now we note from the financial data that we're seeing and also early insights from the 2025 data that really good BDMs do double value for insurers by lowering their lapse rates and driving loyalty and new business. Having that deep knowledge of those advisor business models and local markets in terms of what's going on with competitors, what's going on in the insurance world, what's going on with pricing, what's going on just generally in terms of the advice landscape, and enhancing that collaboration drives better outcomes for the insurer. Now, the barometer does detail a lot of this information, so insights that you can uncover and therefore convert interest into sort of action, understanding how can life insurance become an integral part of our practice. Now, soon we're going to be incorporating benchmarking, within the barometer. So that's more information that can be uncovered at the advisor practice and licensee level across the different, insurers in terms of what we mean by that is the quality metrics that we're uncovering at the survey level at the moment. And this will help even transform the relationships even further into long-term partnerships. What we have recognised as part of the data as well is the rise of general advice advisors. As a significant shift underway, I think with DBFO2, this will accelerate this trend as people start to understand that, GA advisors or general advice becomes a bit more of a cornerstone as part of their sort of integrated sort of holistic models. Now, for insurers, managing this evolution is going to be critical, ensuring alignment with risk professionals who may be a little bit nervous about this trend and what it means for their roles, but whilst also ensure for insurers capturing opportunities in this space. So we'll be uncovering that more and more through the course of the year. Group life and superannuation. It's going to become a key focus of area of ours in 2025. Industry funds are really grappling with increasing outflows from advised members, as you can see in the chart below, which looks at the top 15, 20 super funds. Now, this presents new avenues for personal risk solutions for risk advisors, but it also potentially impacts group risk volumes. And what does that mean for pricing longer term? So through ProductRex, which is a portfolio construction tool, it's a competitor to WealthSolver. It's now the largest portfolio construction tool in the market. We're tracking $2.5 billion in advised flows monthly from about 6,000 advisors. A significant portion of which represents opportunities for retail risk and those advisors as funds shift into retail options, platforms and SMSFs. Some funds are more exposed than others. The other area is superannuation, playing a significantly deeper role in the retirement space with super funds. This is indicated by new retirement solutions being launched, such as the one by Aussie Super and TAL. So we will explore the impacts of these solutions further in 2025, especially through ProductRex. So our 7th annual landscape report is now live with a particular focus on life insurance. Already we have had 870 advisors contribute in the first three weeks, with 501 advisors writing life insurance, 199 of which are significant risk writers, given our focus on basically sending this out to risk writers this year. 58 are part of a preferred insurance program. So the amount of information and data that we collect, we'll be able to cover in depth a number of key areas and comparative analysis. As you can see on the right here, from underwriting to reputation to claims handling to service models. So as you can see here, of those 501 advisors who actually have written risk, it covers about 1,600 or so reviews across insurers already, and 40,000 words of qualitative commentary, which we'll be sort of diving into with AI and sort of unpacking and uncovering some of the more in-depth sort of behavioural elements within that information, within that data, beyond ranking and scoring. We've already interviewed 25 business practices to date, and we'll be interviewing more around what they're doing in the whole risk space. And all of this data is going to be uncovered as part of the insurance barometer. So you'll be able to unveil that and do some of the comparative work within your sort of insurance peer groups as part of that. And we'll be presenting that individually to each of the individual insurers. But all in all, I guess we believe 2025 represents a promising landscape for retail life insurance. We'll be playing our bit. I think together we can help you harness the data, the tools and the strategies to deliver exceptional outcomes for not just advisors but the end policy holders. Just a final note, I want to thank you for 15 or 16 or so minutes of your time and for your partnership today. Have a great 2025.